Hello, traders. Gary Wagner with the Gold Forecast here, 10 o'clock, 10 a.m., Honolulu, Hawaii time. It is the 24th day of January, and this is the Daily Report. Gold, which was trading approximately $10 higher through the evening session, is currently trading off a couple of dollars this morning, currently trading at 1336, 1337. As you can see, when we take a look at our daily chart, and this is of our spot gold, that's right in here, you can see the kind of activity that we've had. This long line right in here represents the high of the day that we saw. This was in the evening trading session. Now, when I reported on Sunday's report yesterday, the market, in fact, was trading about $4 to $6 higher. As it traded through the evening, it got up to about $9 or $10 higher as we came into New York, and that's what I said. It's very, very critical that we see how it reacts as it trades around the world. As it began to trade in New York, the market slowly drifted lower, and as we got into the close, we see this sell-off. My belief is this glip or this upsurge that we saw through the trading session right in here this morning and last night was simply short covering. On today's report, we're going to be taking a look, of course, at spot gold. We're going to take a look at the dollar, and I'm going to look at different areas that I think we might potentially find support, all here on today's daily report. Traders, we are currently looking at a daily chart. This is the April contract of COMEX Gold. This is a chart that I've been currently using for my Elliott Wave count. As you can see, if you look at the count, we'll start all the way back here. These are the tops of what we call our impulse phase. Our impulse phases are always going to be a series of waves 1 through 5 typically, and then our correction A, B, and C. In this last particular impulse phase, because we had that triple top, as you can see, we went 1, 2, 3, 4, 5. We made a higher high so that we had 6 and 7. We had what's called an extended count, and then we went into our corrective phase, which we are currently in, A, B, and C. We're currently trading on this contract at 1337. Now, I have talked about the fact that my belief is that until we really hit this 1328, that's at 38% retracement level, and that is a retracement from what I'll call the big picture, meaning it is a retracement from the beginning of this wave right in here, wave 1 to the top. This is that 1431 high. And so when we look at that and then we calculate a retracement, of course we had 23%. As you can see, it really went through the 23% kind of like a hot knife through butter, and is currently trading just above that particular benchmark that I believe we have the possibility to go to, which is 1328. That's basis the April. Now, when I go ahead and blow that up, you can see that although these candles have been getting smaller in size, at the same time, we are getting a succession of lower closes. When we get the succession of lower closes, and you look at that in terms of the fact that I believe we are in a corrective phase 1, and B, when we look at our Fibonacci retracement, we're really at a mid-ground, meaning there is no level right in here that matches our deep retracement, because these are our critical points, this 23 right here and the 38%, as I said, down a little bit lower. My personal sentiment is that there still is the opportunity for that market, barring any change in fundamental news, to actually trade down to that area. Now, traders, simply what I've done is I have converted this particular daily candlestick chart into what we call our Henkin Ashi chart. Ashi simply means chart in Japanese. Henkin is an average. So it is a average Japanese chart. And what we look for, of course, we have them in the classic colors of red and green, which is what is used. If we go ahead and blow that up, as you can see, we still have a defined downtrend, and according to the average chart, this trend, this correction, is in fact still intact. My recommendation I believe that there's still the opportunity, as I have said, for this market to move to about 1325, 1326, 1328 in that area. Currently trading 1337. Of course, that's basis this April COMEX contract. My belief is that there is still a little bit of room to the downside. Another thing that you might want to notice when we look at it, and that is when we look at this retracement area, one of the things that you can see is this pretty strong bottom activity right in here and right in here. So it tells me that there's good historical data, good historical evidence that points to the fact that this, in fact, might be an area we might go to. Now, once it's there, we still need to see a very, very strong candlestick pattern and signal to indicate a reversal, because just because it nestles into that area doesn't mean that's where it's going to stop. But my belief is that's a logical place for it to go. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily review. Bye-bye.